Hey everybody, Bob Trade Genius. Welcome to my podcast. And today is 28th of March. And I'm going to do here is I'm going to show you some charts. I'm going to talk to those who can only see audio. I'll talk through the charts to everybody and then give you my perspective for opportunities going into tomorrow and also what the week ahead looks like. And just remember, if you want to trade with us, you can go to tradelikeagenius.com. There's some special offers out there for those who are listening. We have services in stocks, crypto. We have a VIP room for trading futures, and then we also do training. Those who love to trade crypto want extra help. Phil's doing classes next Thursday. I think it's April the 6th, 1:30. You can sign up for that. You don't have to even be a client. So check it out. Some good stuff in there, and we're definitely helping people make money. So now off to the market. So what you're looking at here now is you're looking at SPY. I'm going to go to make this as big a screen as I can here for you guys. This is SPY, and this is SPY Daily, and wanted to give you guys a good overarching look here. So we got down into we're looking at January, we hit a low. February, we hit a lower low. But March, we made a higher low, and it basically set the crazy short squeezers off. And a lot of times, March is a low for the year, and it looks like it's making that attempt again. The only difference with this year is we're going from an environment where we have benign fiscal and benign rates to basically it's getting treacherous out there. So at rates increasing, you're going to have, I think it's 22% of the S&P 500 relies on lines of credit to cash flow their businesses. And so when they have their next meeting, I think it's the May meeting, we may already be 1.5 points higher than we are today. It's going to start biting into companies' ability to either buy back shares with leverage or to fund their businesses, and it's going to have an effect on the market. My view is anywhere between the May meeting and June, we should be getting our I don't want to call it a market crash, but we'll get a summer sell-off, and that ties into the political season too. So when you have a first-year president going into his first midterm, the stock market tends to be flat for the year with a summer sell-off, and it looks like it's sure setting up that way again. But bad news for Biden is that coming out of that sell-off, there's usually not a big lift. So he's not going to get a good guy or an attaboy. And with oil, energy prices, food, and all the crazy stuff they're trying to do in terms of restructuring our lives, I think it's going to be a tough road to hoe going into the midterm. So with that as backdrop, let me just go ahead and give you some perspective here. So obviously here's the Bollinger Bands. This is based on 34 WMA. These are really good Bollinger Bands that I like to use to give me a sense of oversold and overbought for reversals. And so we went literally from the bottom here. This is 1.5 standard deviations. I do 1.5, 2.3, and 3. And it ties to with way a lot of the volatility guys like to trade. And so that's how I'm set up. Is one standard deviation move. It happens too often and fails. That I like to have something a little bit deeper. And especially if you get a 2.3 on, if you look here, February 24th, you get a penetration down to minus 2.3 standard deviations. You're going to get a reversal, okay? And look, it happened in January as well. And March barely touched the 1.5, and they lifted it up. And so we've been grinding higher since basically the early third part of March, and now we're almost at the end of March, and we now pushed into the sell zones here. So we have a situation now where we're more than 1.5 standard deviations above the 34 WMA. And we also just crossed the 144. This is the light blue line that you see here. And this light blue line is going to is basically now the new support. So to short this market now, we're going to have to see us break this down from this 448 zone here. Now, another thing I want to show you too is how you calculate maybe implied ranges every day, because we're a volatility-based market now, and so we have a situation where we have the every day it's coming up to ranges, and it blew through the ranges again today. So you can calculate that out, and I did the calculations here for you. Is that tomorrow? So we closed around 456 on SPY. So it gives us a range tomorrow of 458.32 and 453.68. And basically how you calculate it is it's the rule of 16 for the next day. And so you take the VIX, divide it by the by 16, you get a factor. That factor you cut in half. And then from that factor you go ahead and you can apply a range to up and down on the SPY. So tomorrow, the implied range on the high side is 458.32. It's a very important number, by the way. It's an area that we've been expecting to look for an area for reversal. And then on the low side, 453.68. The other thing about what's going to happen this week is at some point during rebalancing, we should get a push down. So maybe we're going to test this 144 from above, either tomorrow or Wednesday. But we have to kind of wait and see. Typically what's happening when we're in a bull run like this, where the VIX is falling, and I'll show you the VIX right here, the VIX has just been falling, okay? And so it's under its trend band here, and now we're getting down to the 19s area. Here's support down here at 16. They could push this thing all the way down. They tend to do that. They tend to drive it down and just make it, everybody's so frustrated that when's this thing going to end? The world's going to end and stock market's going up. It's because they drive the VIX down, it drives up leverage, but as it's driving up leverage, as VIX falls, that calculation makes the ranges smaller and smaller every day. So you're going to start seeing this thing just kind of slowly drift off and up, and then you're going to get this big, baseball bat side your head kind of down moves. And that's what I'm expecting here. So I'm not sure when it is, but since we're in a bull mode right now, typically if Friday's up, Monday's up. That's what happened today. Turnaround Tuesday is usually Tuesday, but it's going to be muted now because of Friday and Monday were so strong. But it doesn't necessarily mean that we'll get a reversal Tuesday. Wednesday is typically indecision day or theta burn day. And so basically burning off the options that expire Friday. So nobody gets paid and everybody gets frustrated trading options. So I think it's going to come Wednesday. Thursday is the last day of the month. It's either going to be extremely volatile, or we're going to get a blast off going into the first of the month, because the last day of the month, first day of the month, and the day after tend to be very bullish. In fact, they're the three most bullish days in a monthly in a monthly scheme. So you usually go long 2 or 3 days before the end of the month, and you close off your trades the second or third trade of the month, and literally that's all your gains for the month typically, because they're chasing the 401k money that comes in and the rebalancing that happens at the end of each month. So that's SPY. So my expectation is where money flows max 100 right now. We're sitting in an overbought situation. The moving averages are doing great. We're above the trend bands. And if you flip over here, and I put SPY on here, my other chart, and these are just manifestations that, if you can see them, are of my algos. I don't show you guys all this stuff because it's really for me to understand. Is that we have the trend bands have turned up on the daily SPY, and we have basically, you can see here the money flow is sitting at full steam ahead. Going back here here's the second column here. These are our fulcrum indicators. Another one of our IPs is telling you trend flip. So those who can see this chart, we trend flip from long to short on the 3rd of March, and that trend flipped back long on the 15th of March. So you're better off selling put spreads in this environment, or taking your shot at going long. And if you're a day trader, you look for opportunities to buy the dips. If you're doing overnight, you're better off just staying on the long side as you can, and until that fulcrum flips again. And right now it's green. It's green as go. So my colors are blue and gray. So blue means positive for me. Gray means negative for me. I get tired of green and red all the time, so different colors so I can contrast them. And down here at the bottom too, this is a tick chart too underneath this. So if I flip off my money flow, for you guys that could see this, is that you will, let me just pull this up here a little bit. So I'm going to turn these off so you can just see the tick values here. So this tick chart, the tick chart is looking at how many stocks are going up versus how many stocks are going down. And that's also been in green too. See, pink is negative ticks, green is positive ticks, dark green is high volume, dark red is low volume, and usually those tend to be reversal areas, but mostly on the bottom than the top. Usually those are capping moves, but this move's been so strong that it just blew right through that, and it just keeps on going. So we had positive ticks of plus 800, when it's dark red is minus 800. When you get minus 1,000 and plus 1,000 on ticks, then you really pay attention to those. So anyway, I just wanted to show you that. So I pay attention to those as well. And like I said here, we're getting into an area now where you tend to see reversals or at least consolidation, and I think we're getting to that point. So that's on the SPY side. So let's take a look at oil here real quick. Go down here, and oil's been they're really fighting it now. So let me close this off here. Is that you have oil finally has broken down below its moving VWAP on a daily basis, and we have to watch out for if it's going to do the same thing it did in March, where it did this push down and then rip higher. But it made a lower high, so this move that we had the 7th of March that took us all the way up to like 130 some dollars a barrel. The high was actually 130.50. This is going to be a tough number to crack. But if inflation stays high, traders are going to pull into oil because it's an inflation hedge that big money can use to hedge. So just keep an eye on that. And we think that there's a chance for this thing to do what I call an extended fib move here. And let me just show you here real quick while we're talking, is that you could just do a fib, fib, where are you, Mr. Fib? I don't want time, I want regular fib. So where are you? Here we go. Fib retracement was at the top. Okay, so you take this low that was in here, right here on the 16th of March, and you pull it up to here. The extension's at 138.71, and then I'm going to reverse this for us, and let me just go ahead and flip that. You're looking at 152.50. Excuse me. Excuse me. 152.44 is the extended move, and we're expecting this to get hit sometime this year. So look for 152.44 as an extended move off this high that we had the 1st of March. And I think we're going to get that this summer, and I think that'll be one of the reasons why the stock market's going to get blown up. So anyway, I just wanted to show that to you guys. So let's take a look at gold and see what's up with gold. So everybody's worried about gold being suppressed. Okay, so here's gold. All right, so gold did the same thing as oil. It pushed down below its moving VWAP, but it was just climbing along it the whole time. So it's kind of in a neutral position right now. But difference between gold this time and gold in the past is that gold has these sell-offs are nothing compared to what they can normally do to gold. And so right now it made a higher low. As long as this 1895 area holds, then we can look to buy the dip on the next move on money flow. I like when money flow, my signal line and my trend line, when they match up at zero. As soon as we get one push higher, if we're above this last low here that I talked about March 16th, then I'm looking for us to make another move higher in gold. So I'm still very bullish on gold. And then, as everybody knows or will know by listening to these podcasts, is my very favorite is uranium. And so it's my biggest personal position. On my wife, who is not a trader, she's more of an investor. Her biggest position is all energy. But on the oil side, gas pipelines, things of that nature, I'm more of a uranium guy. So we don't actually double up our positioning here. So I love uranium. I put it in for our service because I think it has the best move. We've killed it so far in uranium from when we were buying it last year, and we still have at least a double left in this move, if not a triple. So here's Cameco on a daily, and so it broke out, made all-time highs on the 23rd of March. My expectation is that it can reverse at any time as long as it stays up above 2646, 2606 area. Then I consider this just a natural consolidation or profit taking before the next move higher. I could pull some fibs to see where the 1/3, 2/3 is, but I'm looking for this thing to reverse over in the next couple days. Part of this is rebalancing too that we had, but if you notice here, if you look at Cameco, it likes to break into the red zone and pull back to the moving VWAP. Pulled into the red zone, move back to the moving VWAP. It pulled into the red zone. It's going to likely move back into the moving VWAP area. And that's where I'm personally going to add to my position. Okay, so I'm currently trading an equivalent of 3,000 shares. I have 2,000 shares and I have a 10 leap. So on the call side. And I'm going to be adding to my share position on any move towards moving VWAP and keep building my size on this. And I expect this to move much, much, much higher. Another one that we're watching for the room is that we've had great trading on is Quad U, which is UU. It came down and touched this moving VWAP here. So we have a buy order in at 892, I think. I'm going to be adjusting that tomorrow to see how it opens. But if it pushes anywhere into that 892 area here, then I think it's an add. And it's 144, it's down at 792. So if it even pushes down to there, you shouldn't care. This thing has been a beast. And we've been buying this thing. We've been buying this thing ever since it was down at in the high twos. So we've been down here. This is when we started buying Quad U. So we were buying it back in November of 20, and we did our first run on this thing up to 11, and got out. And that's when we got out of it. I got out at 10 actually myself in November 21. So we basically had to move for me, my average price was around 350 because I started buying at 250 and I just kept buying. And I sold it at 10, so I essentially made 300% on Quad U. And then it pulled back and we bought it again and made another quick move right here from these lows down when it got down to 6. When it crossed back over to moving VWAP, we bought it and made a quick 20% again. It's going to come back down, down to the moving VWAP again here on the daily, and I think we're going to be launching again. This thing will be in the 20s by the time this is all said and done. Quad U is a U.S.-based uranium miner, but they also mine rare earths. And as basically the global trade collapses, we're going to be relying on domestic supplies, and prices are going to go much, much, much higher. And then I'm finally going to leave you, even though Bitcoin, I'm just an owner of Bitcoin and trader. Phil does most of these rooms. We did a weekend podcast. You're welcome to do it. But Bitcoin has, as we talked about on Saturday, looking at this thing on the weekly, I was telling people that it's breaking up over its moving VWAP, and usually that just signals rocket ship. So we had a buy signal on it. It's rocketing now higher. Now the question you're going to have is, it made a higher high in April of 21. It made a higher high here in November 21. Is it going to make another higher high because it made higher lows as well? Or are we going to consolidate into a pennant? Obviously remains to be seen. We're grateful for the move and added to. And again, when the thing gets down into that green band, on the Bollinger Band side, it's a good area to start accumulating. It gets in a pink area. If you're a trader and not necessarily a hodler, then you can trim position and keep working your average down. And so excited about Bitcoin. So it's nice to see it moving. It could be a liquidity play. This could be the blow off in the market. We don't know. And Bitcoin, if we have a liquidity move here and the market moves, Bitcoin will definitely move with it. Bitcoin is subject to the Federal Reserve's and central banks worldwide, their balance sheets, very sensitive to that. So they may be telling you they're reducing their balance sheets, but they're not. They're lying to us, as they always do, of course. So you just have to watch where the balance sheet's going. They're not rolling it off. They're letting it accumulate. And then Biden just passed a $5.8 trillion budget for, not passed it, proposed it. And if we get anything near that, the Fed's going to absolutely have to expand their balance sheet. So it's going to be absolutely crazy. And that's what's going to lift all this stuff. So you're going to have to stay real, physical. Putin came out yesterday or this weekend, and started talking about how America and the West uses fiat to destroy value, and that central bankers around the world are not going to trust dollar reserves. They're going to trust physical reserves. So Putin might be planning something there to maybe, you're going to have to give me gold for your oil. You're going to have to give me Bitcoin for your oil. You're going to have to give me something besides dollars for your oil, and or even rubles for my oil. But I think he would rather have something more tangible. And so it's going to be very interesting to see how this plays out. But that's where the world's going. They're going to trust fiat less and less. You have to own physical things, or you're going to be left behind, because you're going to get confetti here at some point. Even though the United States dollar might be the best confetti, it's going to be confetti nonetheless. So anyway, thank you guys so much for listening. I'm going to jump back in there and turn this thing off. And I appreciate it, and I'll be back at you guys tomorrow. Bye-bye.